Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is a 4-hour chart of DXY, and as we all know that there was a huge drop on the chart of DXY during the CPI release yesterday. DXY was trading around 106 level, and when the news came out, it dropped to the low of 104.50. There was a massive drop on the chart of DXY, and we saw a massive uprise on the chart of Euro USD and Gold USD, GBP USD, and others. So if we just observe the chart of DXY right now, then we can see that DXY is right now trading in a downward channel here after making a low of around 104.50. DXY is trying to recover. Okay, to be honest, this is not a clean chart. If we just look at the chart of DXY, we do not get a simple or clear picture. So as a result, you must be very careful if you have any ongoing position, or if you're planning to take any position on any USD pair, because the chart of DXY is not clear right now. Okay, we do not have any clear cut levels. And if we look at the chart of Euro USD, then Euro USD, after making a high of 1.0366, there was some profit booking, and right now Euro USD is standing at 1.0282. This is the current market price of Euro dollar here. So I was looking at the Fibonacci here, and I saw that right now Euro USD is almost standing at the Fibonacci 23.6% retracement level, and surprisingly, that is also the previous resistance. So previous resistance, which now may act as support, R is equal to S, and in addition to that, we also have Fibonacci 23.6% retracement level. So yes, if we combine both the factors here, then yes, there is a possibility that market will be reversing from this particular level here. But personally, I think that as market was extremely unstable yesterday, so we must be very careful if you're planning to take a position in this level here. Okay, during the European session or US session, if you see that market is stable around this level, then only initiate a buy position, and please follow proper risk management, because market was extremely volatile yesterday. Okay, and secondly, in case market fails to bounce from here, then the next big support from where we can expect a bounce is at 1.0210, 1.0200. This is the next support for Euro USD, because this is the Fibonacci 38.2% retracement level. I think that there's a high chance of market bouncing from this level, because when market will be approaching this level, we will not only have Fibonacci 38.2%, but we will also have the 200 moving average, the red line, acting as dynamic support for the market. So I think that this level also has a good potential to act as support for the market. And if market starts going up from here, and if the volatility remains like this, okay, I'm not talking about extreme volatility or crazy bullishness in the market. If the volatility remains like this, then yes, the previous high, yesterday's high, will still be acting as resistance, and if market reverses from this resistance level, then definitely you can take a sell position. But keep in mind, if the volatility remains like this only, under extreme volatility, this level will not have the power strength to reverse the market. Okay, and right now, though market is standing at 23.6%, be careful. See, this is my opinion, my analysis. I can be wrong as well. If you're planning to go ahead, then follow proper risk management. No trader is 100% accurate, so please protect your hard-earned money. Do not gamble with your hard-earned money. Okay, personally, I will avoid, or I'll just watch the level right now. I will not initiate any position as of now. Okay, To be honest, I prefer to take trades on Fibonacci 38.2% or 50% retracement levels only, because I have observed that these levels work better when it comes to forex instead of 23.6% retracement level. Okay, let's wait and watch. If market comes down to the support, and if you see that price is being rejected from below, market is taking support at the level, then only take a buy position. Look for a hammer, bullish pin bar, bullish engulfing pattern, then only initiate a buy position. Okay, bye bye, take care.